The magic number is 25,000. So a lot of the time strategically, we're going to be able to get a client, four or five lenders who each give them $25,000. And that's usually the magic number.
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie, Calls on Call Extraordinary Answering Service, as well as the Bold Business Book. And today we are welcoming / preparing to learn from Leo Cannell, the CEO and founder of Seven Figures Funding. I'm excited to have Leo on the show because today we are talking money and business, which are two things that, well, they go hand in hand and they're a lot of fun. It's what we're doing here. So, Leo, how is it going today?
James, going awesome. Excited to connect with the audience. And there's no doubt about it. Business is an adventure.
I was just reading on your website. It's talking about cash flow, which is essentially the lifeblood of business.
For
So
sure.
let's start out with what is Seven Figures Funding?
Yeah, great question. So, for the last decade, we've been serving small business owners. There's 30 million of them across the country, and most of the time, banks and lenders ignore them when it comes to the financing needs that they have. And so, we've created a marketplace of options with 0% interest options up to as long as 18 months, lines of credit, equipment, commercial real estate loans, and even SBA. Direct SBA in all 50 states with some unique SBA options. And so our deal is somebody needs to be guaranteed they're getting the best option to grow their business. And that's why we included and built this marketplace with the best options.
That is awesome. Now tell me, SBA, I know a lot of, well, some banks that really don't delve into that. So how big of a deal was it to get that as part of
It
your
was it was a
portfolio?
big deal. And more importantly, like the last 2 years, SBA actually started to make programs that were much quicker and easier. I mean, we've all seen the nightmare of, oh, it takes months. And I remember one of the first SBA loans I did was for a gas station in San Diego. It took us 11 months to get that deal done. Absolute nightmare. And that's typical of SBA. And they have now streamlined a lot of those programs in the last 2 or 3 years since COVID. And so we've got a much more what we call the SBA Express loan that they can get done in about 4 to 5 weeks. And that's been a very solid program for small business to be able to get $150,000, $200,000 loan with an affordable payment. And so, yeah, definitely been a journey. Haven't always recommended, but for the right business, it can be a great option.
I love talking lending in business because interesting when I'm coaching or teaching business planning classes, I say the
Yeah,
funny thing about getting money from banks is that you have to prove that you don't need the money. You
sure.
have to give them all this stuff, collateral stuff, and show that you have good credit history and all this kind of stuff. It always seemed like I get it, they want to be paid back, but on the flip side, if we really had everything that you possibly need, we wouldn't need your funding. So tell me, who is your ideal client with Seven Figures Funding?
Yeah, our ideal client is a small business owner, probably doing less than $5 million a year in sales, who needs financing to grow. That's probably about 30% of our business, but 70% of it is somebody who's new. Like you've been in business less than a year or two, maybe even pre-revenue, and you're looking for startup funding options. And so we work with a lot of business coaches, consultants, and trainers, get their clients access to capital. And that's where 90% of our business comes from, is those relationships with those who are in the trenches helping new businesses grow, and so we get them access to that financing.
Nice. So tell me a story about interest rates. Those have been on top of people's minds during pandemic when they were crazy low. And I guess a year ago when people assumed that they were crazy high, but relatively speaking over the decades, not that bad. Now they're coming down a teensy bit. How does that affect what you do or what you offer?
That's a great question. Without a doubt, if you're dealing with commercial real estate or equipment financing or even SBA loans, those are oftentimes tied back to prime interest rates. And prime interest rates are, around 8%, maybe now down in the 7.75% range. And so it certainly has an impact on secured stuff. But for most business owners, they're different than consumers, right? If you're a consumer, well, you go get financing for your home, for your car. I mean, it's a place to live, it's a way to transport yourself, but it's not necessarily generating you income. if you're a business owner and you need a loan or line of credit or whatever it is to get your business off the ground, oftentimes you can turn that into a 300% return. So whether you're paying, 6%, 8%, 15, 20%, as long as you're making 2 to 300% on that money, which most business owners are, then you're coming out okay. And a few percentage points here and there isn't going to make a big difference. The bigger issue is, are you generating a return, an ROL, as we call it, return on loan, return on line of credit? And that's the bigger factor for businesses. So businesses ultimately are less impacted by rates. Now you start dealing with monster businesses, big tech companies, companies like GE, and you start talking about financing billions of dollars, which they need to grow their business, and it can absolutely be a big deal on their cash flow. If you're a company like Walmart or Amazon, where your margins are much, much tighter, financing rates go up, and every big business is using financing, contrary to popular belief. Oh, they just have cash for everything. No, they're all using financing and 60 and 90 and 30-day windows to be able to stretch out their cash and increase their cash flow. And so even those big businesses, Walmart has over 500-600 lines of credit at any one time. So they're much more impacted. An interest rate change can be worth billions of dollars for them.
Got it. So let's talk about you in this business specifically. How did you end up in the lending business here for small businesses?
Well, my background was in mortgages back in the day before the 2008, 2009 recession. And so I had that background of getting homeowners financing and investors financing for single family properties, multi-unit properties. And when the recession hit, that business really dried up very quickly. Most of the lenders we worked with actually went out of business. And so it was at that point I started to try to figure out, well, what's the next step here? I was looking for something that would be quote unquote recession proof. And so I looked into commercial real estate financing, did some deals there. And then I started to realize there was this niche of new, smaller business owners that need $50,000 to $100,000 in financing. And there's literally millions of them across the country, and they're ignored by most banks and lenders. And I said, well, that's the niche I want to serve, where I can make a big difference. And so we build out a marketplace of options for those clients. And fast forward a decade later, we've served tens of thousands for hundreds of millions of dollars of those small business owners. And it's been very rewarding, especially when you can see, I remember we had a client in Denver, helped her get financing for a beauty salon. She was declined by her local bank. We got her $70,000. I bumped into her at a GrowthCon event. A couple of years later, she had 20 employees, was getting her own building, opening a second location. And so that's when I started realizing, wow, I don't always hear the after story of when you get somebody financing, but that's when you start to realize, well, you really are making a difference. They're creating jobs. They're creating products and services that improve everything. I mean, that girl has over 1,000 five-star reviews online. She's killing it. So that's a good case study, I think, in what can happen.
That's awesome. It's funny you talk about that dollar amount, the smaller dollar amount, smaller, right? Being ignored by lenders. I can remember the first commercial property I was looking at. I was all excited because I'm like, we're not going to pay rent anymore. We're going to get this building. The building was a warehouse condo, $120,000, something like that.
Yeah.
And I went to this bank, this First Business Bank or whatever it was. And they're like, yeah, we don't do anything that small. And in my mind, I'm like, $120,000.
That's a lot of money. What are you talking
change, right? Like we were doing, I don't know, we were doing maybe $400,000 or $500,000 a year in revenue.
Yep.
So for newer business, I'm like, well, what do you mean? She's like, we don't look at anything under $750,000. And so I joked and I was like, well, if I get a $750,000 loan, can I just pay back most of it the next day? Because I only need this little chunk. So it was interesting that I had to find a bank that was willing to do a deal that they considered small that I had no idea. I had no idea. So anyways,
Such a good point, yeah.
We don't use that bank. We
Nope.
stick with the bank that helped us out in the beginning, and you grow, you make money. And it's weird how a lot of these just industries or vendors, whatever, they just ignore the little guys on the assumption that they're always going to be little, but little, like that ladder's got multiple rungs. And as long as you do it right, they're going to become big guys. And I don't know. I don't want to work with the people that didn't help me when I was a little guy. So
Me neither.
move on. I guess as far
Exactly
as that
right.
goes.
No, and that's exactly right. Those small businesses are ignored and they can do amazing things and become 8, 9 figure businesses. And so that's where we love to step in and give them financing access and in education. Like James, no one teaches us about how credit money financing works. And so the more we can educate them, everybody that applies for us, we give them access to our credit college platform, the business funding formula book I wrote just for free. We want them to share it with everybody because if they understand their credit better, they're going to pay less interest on business, less interest on their personal financing options, and those are things that are just not taught in school.
No, not at all. I remember teaching business class and I told people wherever you are at personally with your money, when you start your business, just multiply that times at least a factor of 10. So if you're good with your money, great, it's going to go up. If you're bad with your money, not great, it's going to go down. So learn to figure out your personal finances and then once they get in order, then tackle the business financing.
Amen.
Because I mean, personal finance, you dig yourself into a hole, it's tough to get out of.
Very.
Business holes, holy jolly, those commas add up. I've seen some people get in trouble. So luckily I dodged those bullets. But at any rate, tell me what are some of the things, let's just say top three, top five things that you wish people, entrepreneurs knew before they came to you looking for money?
Great question. I think what you're asking is how do you become fundable and stay fundable all the time as an entrepreneur because you never know when you're going to need to access financing and capital. And usually the best time to get access to it is before you need it. And so it starts with that personal credit score, keeping that personal credit score high, hopefully above 720, even above 750, and understanding the FICO score is different than a Vantage score, that Credit Karma score that you think is good doesn't mean anything. It's a Vantage score. You need a FICO score. You can get access to that Experian.com. So understanding your FICO score, keeping the credit high, that means making payments on time. That means when you go to apply, your personal credit card balances are, below 30% of your credit card limits. That's a credit secret that can keep your score 50 to 100 points higher. And then having a mix of credit from mortgages to installment loans with car loans to student loans aren't generally a positive thing. Credit cards are a good thing as long as you're keeping the balances low, and then you never want to close a credit card because then that lowers your average age of your account history, which lowers your credit score. So first is credit. Next thing to pay attention to is your business bank account. How you take care of your business bank account says an awful lot about you as an entrepreneur, as a business owner. And so if you are putting your bank account in the negative, if you have a low average daily balance, it's always below $1,000 or $5,000, and you're taking out a lot more from the bank account than you put in, then those are factors that are going to negatively impact you anytime you want to get financing for your business. So the business bank statements and how you take care of your business bank account is the next important factor you want to pay attention to. And then the next thing you want to look at is your business tax returns. If you know you're going to need that decent sized SBA loan, then you can't strategically always write off every last dime on your business tax return. You have to show some sort of net income. Things that you may not know that actually go towards your net income are what you pay yourself in W-2 salary. So if you pay yourself, you've got an S corp, you limit your tax liability, you pay yourself a 50, 70, $100,000 a year W-2 salary, you can add that back in. So if your business shows break even, but you pay yourself $100,000 a year in W-2, you actually show 100,000. They'll add that back in. They'll add back in depreciation if you have a lot of equipment or trucks or vehicles that you own in your business and you depreciate those. That's not a cash expense. You get to add that back in. So just understanding those things that are going to be added back in to show that the business is not break even, is not losing money. It's actually generating cash flow. You've heard cash is king. That's true. You want to keep balances in your business checking account and savings. That's very important. But also cash flow, you're taking out less than the business is bringing in is going to be a big factor. And the way that you are showing some cash flow in the business on your business tax returns will be the next thing they'll look at.
Nice. I love it. Tell me about business credit scores.
Yeah. Yeah. And so we know with personal credit, right? We want to have that 720, hopefully 750 or better FICO score with Experian, Equifax, and TransUnion. With business, the three major business credit bureaus are going to be Dun & Bradstreet. That's the first one you'll build that profile with, that foundation. Next will be your IntelliScore with business Experian. And then Equifax Business is the third major bureau. And they are very tied to any type of business credit card or a bank loan that you get in the name of your business. Those three business credit bureaus are going to make up what's called your FICO SBSS score, which SBA uses to approve an SBA loan. It used to be that SBA didn't really give much credence or it wasn't a big factor in getting approved, that business credit score. Now it's probably the number one reason we see business owners get declined for an SBA loan is they have no business credit. And the issue is when you will go out and get a car loan personally, it reports that next month immediately, sometimes within days, all your payment history. You go and get a credit line at your local supplier store down the street, 9 times out of 10, it will not report to your business credit history. And so you have to proactively build that business credit profile and work with vendors and creditors who report your credit history. And so that's one of the things that we help business owners with is educating them. Hey, here's the vendors who actually report. You have to actually build your profile. Everything needs to match up from your EIN to your address, to your business phone number, to your website, to the name. If your name doesn't show up and connect with what's on the state website, with what the business credit bureaus like Dun & Bradstreet are showing, it won't report. And so just understanding how to build that business credit is very important to being fundable that next step.
That's so interesting. The Dun & Bradstreet thing. I remember when I first started my business, 2006. I don't know if it was exactly 2006 when I got this letter, but I got a letter from Dun & Bradstreet saying, hey,
Yeah.
we got your credit score for your business and we want you to pay us whatever it was per month or per year. And I was like, wait, what? Who are you and what do you want? So tell me about paying for something like Dun & Bradstreet.
Yeah, the interesting thing is just like we sometimes assume, oh, these credit bureaus are part of the government. They're not. They're all for-profit businesses. Experian itself does billions of dollars a year in sales. Even though they're headquartered out of Ireland for tax purposes, they're obviously the biggest credit bureau here in the US. And so with these business credit bureaus, same thing. They are not part of the government. They are for-profit entities, and their sole job is to be able to make it easier supposedly for banks and creditors to decide if you're a good risk to give out financing options to as a business owner. And so yes, you can, most of the time you can get your EIN, your DUNS number as it's called. You can get that DUNS number free from Dun & Bradstreet to build that business credit profile. And then if you just work with the right vendors who report, then you don't necessarily need to pay Dun & Bradstreet. Where it may make sense to pay them is if you've been working with a vendor locally who does not report to D&B system, but you have a $10,000, $15,000, $25,000 credit line with that local vendor and you've got good payment history. Well, it may be worth paying Dun & Bradstreet so that they can verify that payment history and help strengthen your business credit profile, because without doing that, they actually won't do it. And then Dun & Bradstreet is kind of the first one. You actually can't get established with Business Experian until you've gotten established with Dun & Bradstreet. And then after Business Experian, now you can actually go and get your profile going with Equifax Business. And so it's kind of interesting how they all three work hand in hand, but it starts with Dun & Bradstreet. And so it only makes sense, I would say, to pay them if you've got a big credit history with a vendor that doesn't report to them already. That may make sense. But yeah, at the end of the day, they're very much a for-profit company, and 9 times out of 10, you probably don't need to pay them for anything. They're going to report that credit score as long as you are working with vendors that report their payment history to Dun & Bradstreet.
Got it. It reminded me, because I'd never heard of them. I didn't know who they were. It reminded me of those domain network envelopes that you get that say that you
Oh
owe
yeah, like, oh, send
$500
some
for your
money. Yes. Yeah.
and way fine
Good
print it
point.
says this is
Good
not a
point.
bill or this is not a
Yeah,
legitimate
you don't
invoice,
actually
whatever.
owe this. Yeah, we just want to take the
Yeah.
money.
So I'm like, who? What? Who are you? So tell me a story about the lenders that you have that are actually supplying the cash. Are these private individuals? They're banks? You mentioned SBA. Where's all this money coming from?
Great question. So it's a network of lenders, some of them online, some of them public, some of them private, banks, credit unions. And a lot of it sometimes has to do with where you're located regionally. Sometimes we establish relationships with really good regional lenders if you're like in the south east of the United States, or if you're in California or Washington. Like there's different lenders in different areas that have different programs for every business owner. So when somebody applies for financing, we're putting together a custom funding plan of the lenders most likely wanting to work with that client based on the business industry that they're in, based on where they're located geographically, and then obviously, where their strengths at. Do they have really strong personal credit and not a lot of business financials? Do they have good business financials, but their personal credit's not perfect? Figuring out where the sweet spot is, where the strong area is, where they're most likely to get approvals, and then just presenting, hey, here's your best options. And literally, like, if I was in your shoes for my own business, this is who we'd be working with. And then we do the applications after we pre-approve them, get them the money, and then of course they go on their way. And the real heroes of our business are our funding advisors. We've got 30 different employees here at Seven Figures, and over 1,000 5-star reviews, A+ rating with Better Business Bureau. And boy, that's important, right? If you don't have great online credibility, and you can't hide from the experience you give your customer in today's world, then your business is going to be in trouble. So you've got to be focused on that.
Fair, totally fair. So, how long have you had this business?
We started Seven Figures in 2018.
Okay, so 2018, first couple years going, then you run into a pandemic, interest rates going all crazy things. What are some of the challenges that you've run into that you didn't necessarily anticipate?
Well, the interesting thing was, James, like in 2018, 2019, those first couple months of 2020, 60% of our business came from live events. I would send part of our team to these live events. All these business owners would be there. They would need financing options to grow. And so that was where the majority of our business was coming from. And so then the pandemic hit in March of 2020, and it absolutely destroyed our business. Up until June of 2020, what we did was we invested in a partner portal so that all these business coaches and consultants and training organizations could have visibility to know that their clients were being taken care of, and transparency. Okay, they've got their financing. Now they can work with us. Now they can grow. And so we invested in that portal in that period. And then we pivoted to virtual events. And then since then, it started growing and having record months. In July of 2020, every month thereafter. And so, yeah, a lot of learning lessons there. A lot of, if you didn't pivot to virtual, you obviously had a tough time. So that was important. And now virtual events are such a big part of so many different B2B businesses. So that was a big learning factor for us. And then just continuing to evolve in terms of content marketing. And obviously, it doesn't matter what business you're in, and you don't think you're great on video. Just identifying and doing short video content on your dream customers' biggest problems and pain points, and how you resolve those, and giving freely of those solutions is just so vital and important, because oftentimes people be like, okay, they like what they see, and then they're going to go look at your content, and then based on your content, now they're going to decide if they want to work with you. And so that's been another important factor, I think, is producing that content and that value for our customers.
Yeah, that's awesome. So tell me, as far as employees go, 30 employees, that's quite a few. And pandemic time well, even now, employees aren't the easiest game in the world. So tell me, how do you find good people and how do you keep good people?
Well, birds of a feather flock together. And so for us, identifying good people, and then when we're looking to grow and expand, asking those good people if they know other good people, has without a doubt been the most effective strategy for us to find quality candidates to fill those positions, number one. And then number two, we have had a lot of success posting jobs on Indeed, and then just making sure that your interview process is asking open-ended questions For me, I want to identify what are the values and principles that this person believes in, that they stand for, and do they mesh with our values and principles? Because if they don't, it's not going to be a good fit. And then is this person a solutions-oriented person where if there's a problem, they take ownership, they find solutions? Or is this person someone who wants to whine and complain, blame others? And I like asking them about, challenges that they've had in previous jobs and how they resolved those. And when they can explain those effectively, that gives me an idea, if they're going to be a good fit. The other thing is if you're hiring for technical skills, like we have a couple of coders and developers here for our fintech platform. And so for them, it's, well, great. I'm glad you have values and principles. I'm glad you focus on solutions, but do you have the skill set to actually do the job? And so in a unique position like that, I've got our CTO who will literally have tasks that they have to go and do and then present to prove their skill set that they can do that job. And I think that's another really important thing is if it's a skill set job where they have to be able to do certain things, give them a task and see how they do it. And now you've got a good idea of whether they have the skill set too. So you have like the hard skill set and then the soft skills of, values and principles, and putting those together, I think is important.
Got it. I completely understand that. We're doing very similar things, trying to get good people and all that jazz. Tell me, as far as managing 30 people, that's a small army. That's a decent sized crew. So how do you set up a managerial hierarchy, or do you set up a managerial hierarchy?
I absolutely do. And so we've got a couple of additional, really three. Got our COO, and then we have our director of funding, and then we have our funding processor who's in charge of the entire funding process and manages about four people in her office. And so, yeah, it is key to having good leaders who are good at what they do and can communicate that well to everybody else. And the interesting thing that I think a lot of entrepreneurs sometimes get confused on is they assume that somebody who is a high performer, high producer is automatically going to be a good manager and a good leader. And that's just not the case, right? The ability to manage and to be able to get a lot and have rapport amongst the team and help people succeed and teach is completely different sometimes in a skill set versus someone who's a great producer and a great performer salesperson. And so I think that's been part of our learning curve is, just because they're great, they're our top producer, doesn't mean they're automatically a great manager. And then leadership is all about the one-on-ones and finding out what drives somebody and giving them, not only logical steps that they can do, but hey, what's that emotional thing that they want to accomplish? Are they working towards buying their first home? Are they working towards, being able to go on vacation, get married, whatever the thing is? And so it's important, I think, for them to have emotional drivers as well as logical ones.
That's fair. Totally fair. Are these in office? Are they remote? How does that work?
We definitely have both. It's interesting. We had some really good team members who were working in the office, and then we're here in Utah, and they're like, "Oh, we're moving to North Carolina." And so we said, "All right, well, here's the parameters. Here's what you have to be able to do and prove that you're doing, even though you're not in the office." And they had worked with us for a few years, and then moving to North Carolina, they've done a really good job of working remotely. So we definitely have a combination of both those who work in the office every day and those who are remote. But I will say this, if you have a sales environment, the more you can get sales teams in the office, I think that's important.
Yeah. Yeah. There's thrive and competition. And yeah, they push each other, I guess, from what I've seen, which is very good.
Definitely.
So are you relying on people finding you, or are your sales crew actually going out and hunting for potential businesses that need some money?
A little bit of both, but most of our business again comes from the relationships that we've established with different business training, consulting, and coaching organizations, and so really it's managing those relationships. And myself and my partner, we manage most of those relationships, and then we have our customer service team that is always communicating with them and communicating with their clients. We do that through private Slack channels, and that's been really effective. And so for the most part, our team is coming in and they've got appointments on their calendar that they're calling and clients that they're taking care of who have already applied for financing and been approved. And so that's really their job, is to take care of the client. And then as an organization, we're building those relationships. But we always incentivize the entire team to bring in more relationships and to incentivize them and pay them for doing that extra work. And it's funny because the previous company that I was a owner in, like my other partners, thought that was a terrible idea. They were wrong, because you should be incentivizing growth. You should be aligning those incentives as an organization. And they had everything misaligned, which didn't lead to good results and didn't even motivate the team to go out and find new referral partners. And so from day one, we've been clear that that's something that we value.
So, oh, just so I understand, with this previous company, what did they want to do instead of what you're doing now?
Well, it was the same setup where you were generating a lot of your financing leads from these different organizations who already had business owners that needed financing. And just the difference was, instead of the setters, for example, right? In most sales organizations, you've got a setter, and instead of incentivizing the setter to be compensated based on the overall income of deals that they generated, they would give them different parameters like, oh, if you just get somebody pre-approved or get their credit report, we'll compensate you just for that job alone. And then that misaligns, instead of working with people who are going to get pre-approved or are likely to work with you and compensating them on that overall thing that benefits the entire company, they would just misincentivize them just based on a factor that looked good on paper but didn't actually help the company. That was one. Two, those employees weren't incentivized to go find clients on their own because they didn't make any extra money. With us, they are. Our team is always incentivized. If you go find new deals and it saves us marketing dollars, we're going to pay you more for that extra effort of bringing in a client.
Got it. Okay. I was just reading a book. Oh my gosh, I can't think of his name. The guy that helped with lean manufacturing and all that. Oh my gosh, my brain.
Not the
Anyways,
lean startup, though.
no, not the lean startup.
Okay.
Lean
Yeah.
manufacturing, like he was a consultant for Toyota and Honda and all that kind of
Oh,
stuff, or
very cool.
just in time inventory and all that.
Yeah. Yeah, yeah, yeah.
Cannot think of his name. At
Yeah,
any
boy,
rate,
Tim.
he had something. I read a different book of his that was more about how to essentially pay people, and he was talking about how incentives, when you get incentives going, people try to game the system. You just put stuff out there that's attached to this metric, and instead of saying like, hey, we'll make the company better, they're going to tackle that metric. And it was one of those like, man, every time we come up with an incentive with, we're hoping to grow the company, we got to come up with a way to avoid it being gamed. So that's a challenge, which I imagine that's a challenge for any business, but especially in sales where a lot of it's commission based, I imagine, right?
Well, yeah, as long as it's tied to actual cash that's coming into the business and you're making sure it's a quality customer, as long as those two factors, those two boxes are checked, then I think you're good to go. But you're exactly right. In my previous company, it was metrics that didn't actually, for sure, and oftentimes more than not, led to customers and clients who are not a good fit, that did not lead to actually generating cash for the company. So that's exactly what you're pointing out. As long as those incentives are really aligned properly with the entire mission of the company, bringing in the right customer client who's going to stay with you, who's going to bring cash into the company, who you can serve at a high level, that's a win. But if it starts getting outside of that, then it's pretty easy to just let them know, hey, that's not going to work. It's got to be the right, our customer, our client, our strategic partner we want to work with.
Tell me what kind of metric do you use to come up with the, because you said quality client. What is the metric that you use to objectively measure that, or can you objectively measure that?
Well, generally, it's somebody who knows they have a purpose for the funding in our business, right? If it's a tire kicker, "Oh, I'm just curious what my financing options look like," then that's somebody who's not going to be nearly as motivated as somebody who, on their purpose for funding, says, I need this piece of equipment. I need to hire people. I need to run a marketing campaign. I need to buy this new coaching or training program that's going to take me to the next level. If they don't have a need right now, then that's probably not someone who's going to be a great customer.
Got it. Okay, so very easy, very black and white there. Tell me a story about. So we're recently coming out of some hurricanes, maybe even jumping into some new ones. You got a business in Florida, and hurricane comes along and let's say takes out your office building or takes out your restaurant or something like that. So now you got people to pay because you want to keep them fed. You need some money, and maybe insurance will come up, but insurance is pretty pokey. So can they come to you? Something
They
where they need
can.
money pretty quickly?
Yeah, yeah. We've got different options that they can access. Loans, lines of credit that can fund in quickly as 24 to 48 hours to be able to take care of things. But especially in a disaster area like that, there is a government-backed program that we've all probably heard and remember from COVID, the EIDL, the Economic Injury and Disaster Recovery Loan. And that is actually what that loan is billed out for, to be able to give loans and financing to businesses who are absolutely negatively impacted by a hurricane or a massive storm, something like that. And so those loans are specifically very affordable with very affordable monthly payments and low interest rates so that they can get back on their feet. And so that would be another option that we would recommend. And we don't always recommend options that we actually make any money on, and that's fine. We just want to help the client. So if you need money right now, here's an option. And then the longer term option, you should probably look at this. And that would be what I would definitely look at. And then of course, the next tricky piece is then of course, then some of the property insurance and the insurers all start to leave the state. I know because I've got some Airbnb properties in Florida, and all of a sudden I'm getting notices of, oh, we no longer offer, property insurance. So you've got to get new insurance for your properties. And so then you make that adjustment and go find the next insurer, right?
Yeah, right. Man, I've heard a lot of horror stories about that. I don't have anything in Florida, so but we've answered phones for places, Airbnb places specifically
Yep.
that are in Florida. And yeah, they've gotten some letters. To me, it's funny because you're in the insurance business. This is Florida. It's an expectation of what's going to happen. But they're like, oh, we didn't know we'd actually have to
We're
pay out.
surprised.
What in the world? We thought we just collected. This is a one-way street here. So,
No.
anyways, let's talk about the lenders that you have more. I don't know how difficult it is to get a bank to work with you. Is that something that you have to reach out to them and say, hey, we got these programs, we got these people, we got these customers, or banks coming to you say, these are kind of small, you do the paperwork. Tell me about the relationship there with your vendors.
Yeah, I mean, we always help with the paperwork because that's just part of our service is consulting and getting those applications filled out and filling them out the right way because there's a wrong way to fill them out. So that's number one. And understanding who's lending, right? Because everybody has certain numbers, targets that they want to hit for the quarter. And so when certain lenders hit those, then they kind of pull back their lending. So we're always keeping our fingers on the pulse of who's lending right now, who's not, and then shuffling those lenders around based on who is lending. But there's a few secrets that you can start to follow. I mean, number one is obviously being very judicious about where you have your business bank account. If you have your business bank account at a lender, are they going to be able to give you a line of credit in the future? Can they give you a good sized business credit card? Do they have cashback rewards? What benefits do they have? And if you can take really good care and keep a decent amount of money in your business bank account, then nothing's going to make it more easier for you to get financing in the future than that. As an example, Chase can be really good to work with, where we've got some clients who maybe start out with just a $10,000 business credit card limit or line of credit. And if they take good care of it, and that means they use it and then they pay it down to zero, use it and pay it down to zero, they'll literally take that $10,000 limit and expand it to $100,000 without you even having to ask for it because of how you use it and pay it down to zero. And so those are some strategies that we always recommend the business owners look at.
Nice. That sounds cool. I am curious as far as the banks go. If I'm working with a bank, is it better to go through someone like you, or is it better to ask that bank and then if they say no, come to someone like you? Or how does that work?
That's how most of them do it. Most of them ask their bank, they're told no, and then they come to us.
Gotcha. Okay. And you have a bigger pool of lenders, all that
We
jazz. So there's
do,
more
yeah,
opportunity.
we for sure.
All right. Got it. Where do you see lending going? I guess crystal ball here. Where do you see lending going in the next 3 to 5 years? Is it going to be easier to
Fintech
get cash or more difficult to get cash?
probably easier, and the way it will happen is through fintech platforms. So we've just invested a decent amount of capital into a platform called myfigures.com. And in that platform, there's one funding application. You connect all your bank accounts up, you manage your cash flow, your business tax returns can be done through the entire thing. But in there, it automatically connects with the top 100 lending sources, provides 4 or 5 options without you even having to speak to somebody. And so the more integrated these fintech platforms get, the easier it will be to access capital. So you just want to make sure you're at a platform that has access to all of the different options out there. And it's getting much more detailed because they'll read what you're doing with your bank accounts and how your cash flow looks. And they're checking credit with the soft credit check pull without even needing to do anything hard and official, and automatically giving you options. And so yeah, the more technology continues to advance, the easier it will be, where you probably don't even need to speak to anybody to be accessing capital.
Oh, interesting. Oh, that's very cool. Tell me a story about personal guarantees on business loans. And what is your recommendation for that?
Yeah, good question. And so whenever you're dealing with SBA, it's always going to be personally guaranteed. Whenever you're dealing with an official bank, it's going to be guaranteed personally. And that, of course, means that you are risking, your personal assets, equity in properties, bank account balances. You're not ever risking a retirement account that's in an official 401k or IRA, because those are usually exempt, even in cases of bankruptcy. So that's how personally guaranteed. The magic number is 25,000. So a lot of the time, strategically, we're going to be able to get a client, 4 or 5 lenders who each give them $25,000. And that's usually the magic number, where if it's below 25,000, then it's not a personally guaranteed. And so if you think about a business credit card, that's generally not personally guaranteed. If you default on it, are they going to report negatively to your personal credit and business credit? Of course, but they're generally not going to be getting a judgment against you, because it's not a personally guaranteed. It's what's called unsecured. And so unsecured financing is a lot of the times what we're specializing in, and getting customers and clients access to, is unsecured financing. So yeah, if you do anything with SBA, anything that is with a bank loan, and generally over $25,000, then 9 times out of 10, it will be personally guaranteed. At the end of the day, though, if you run into trouble, nobody wants to be in the collection business. They don't want to write the loan off. And so just communicating and continuing to make some kind of payment and working out a payment plan, you can almost always do that in today's world, more than ever, with pandemics, all the crazy stuff that's gone down in the last few years. So if you get in that situation, you just want to communicate and get payment plans put together, and then focus on the number one in your business, which is sales and cash flow.
Fair, totally fair. With oh my gosh, I forgot what I wanted to ask here. Where do you see your business going over the next 3 to 5 years?
So our business, I see our fintech platform as being this new way to be able to reach more customers and make a bigger impact. And as we've served small business owners, we've noticed that the number one issue most of them fail is they don't know how to manage their financial numbers. Like, they just kind of look at the bank account and like, oh, I think I can do this, or I think I can pay myself, or I think I can, you know, buy this expensive piece of equipment, or put a bunch of money in marketing. And so the ability to unlock cash flow insights to make good decisions in the future is what we've seen as the key to success versus failure. And 82% of small businesses fail because they don't know how to manage cash flow. And so that's why we built this cash flow platform, to help these small businesses be able to manage it and know, well, based on my current financials, this is where I'm going. And if I do this, this is what happens. If I do this, oh, this bad thing happens. And so that's what we've really invested our time and money into. And the biggest way we feel like we can positively impact these business owners moving forward is using these finance platforms that we've built out, because if you don't know your cash flow, you can't make good decisions. And the problem with most accountants is they'll tell you, hey, here's what happened, but what you need to be able to do is what should I do moving forward? And that's the bigger issue.
Oh my gosh, I have learned that lesson so many times.
Yeah, me
So many
too.
times. I just had that conversation. I shouldn't say just, it's been almost a year. I didn't realize it's already later in the year now. But I had that conversation with my accountant about taxes last year.
Yeah.
And I realized that there's a difference between a tax preparer and someone that does more anticipation, or you give them the numbers for where you at to help you understand where you're going to make some strategic moves. Instead of saying, you know what you should have done, or even me asking them, what should have I done to avoid this? It's a interesting game.
100%.
It's
Yeah.
a very interesting game. I always think of it like Monopoly, but the instruction manual is about 18 huge dictionaries deep. And you got to figure out which part of the instructions you have to pay attention to here.
No, 100%.
So it's rough. It's rough. Leo, we don't have a ton of time here, but I want to ask you a little bit more, just deep in it, getting into the business side with you personally, as the owner and all that jazz. What are some of the challenges that you've run into over the course of time since you started that you didn't even see coming?
Well, the interesting thing that always happens is anytime you have, more than maybe even more than 5 employees, you might think that, oh, the culture is doing well and everybody's enjoying their job. And then you'll find out from, one of your employees that you've got a really good open communication relationship with. Well, actually, a good portion of the staff's not happy, or we're dealing with this issue. And so those are some of the things that you would think that people would just be very straightforward about, how things are going for them. And so those one-on-ones are really important. And so for me, those have been problems what I've run into, and I didn't anticipate because I thought things were going well, morale was high. And so just constantly monitoring, values and principles. What does the company stand for? What is important? What is acceptable and what's not? And then the other part of it too is holding people accountable. Your job as a leader is to hold them accountable, and that's not always easy. And so just the more, clear you can be, the more upfront you can be. And then of course, one-on-ones, like I said, is really important, because then people can set goals when they don't achieve them. And you can point out that, well, the work effort, the work ethic hasn't matched what you wanted your goals to be achievable. And so those things have been important. Those were challenges that I thought if we were communicating well, that the culture would be good. And so that's been something that's been a constant learning curve, and just having good leaders, on your team. The sooner you can find and develop leaders, the sooner you can grow and scale your business significantly. When my business partner agreed to come on full time, we literally tripled our business over the next 18 months. And so that's a powerful growth factor that I knew was pretty certain was going to happen, but seeing it actually happen, that was eye-opening how important leadership is, and leaders, not just you thinking that you need to lead and manage and do everything. No, if you're going to grow and scale something that is making money while you're on vacation and sleeping, then you've got to have great leaders. And so teaching them and sharing content with them is important. The other thing that I've realized is the more that you can get people reading and learning new skills, the more they'll continue to progress and be productive and actually be happier, because they're learning those new skills. And so giving them the chance to present at company meetings, I think, is important. And then at the end of the day, again, the number one issue that business owners face is cash flow. And so the crazy thing can be, for a long period of time, things can be going well, and then all of a sudden something will change in your business industry. And all of a sudden, instead of having these super profitable months, now all of a sudden you start breaking even, and figuring out what you need to do to change and get back on track with that has also been something. Because when you're having success month after month after month, you sometimes can just think that that's going to continue, and it's not. If you aren't continuously evolving and improving, It's one of my mentors put it like this. He's like, you're either on the escalator that's going up or down. You're never in the same spot. You might think you're maintaining the status quo, but you're not. If you start flatlining, you will start going down. And so it's that need to always be improving. And that means improving the technology and the team in your business. I think those are the two things that you've got to always be improving.
True story. I remember in 2000, I don't know, 2009, 2010, I had a guy tell me that plateau is the new up. And I'm like, no way.
No, that's the new down. That's the same down.
Grow or die.
Yes, that's exactly right. 100%.
So, yeah. Leo, how can people find you?
Easiest one, very active on LinkedIn, Leo Cannell, Kanell. So I do a lot of posting there and very active with LinkedIn. The other ways are one of our simple websites is 7figures.com, just the digit 7figures.com. I bought that from the previous owner of vodka.com. He sold it to the Russians for like $10 million and he gave me a great deal on it. So 7figures.com is where we've got a lot of free content and information to help entrepreneurs.
The irony of 7figures.com costing 8 figures. Holy cow. That's a lot of cash for domain. Leo, thank you so much for being on the show.
My pleasure.
This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. My name is James Kateman, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. We'd like to thank you, our wonderful listeners, as well as our guest, Leo Cannell of 7 Figures Funding. Leo, can you tell us that website one more time?
You bet. It's 7figures.com, just the digit 7 and then figures.com.
I love it. Past episodes can be found morning, noon, and night at the podcast link found at drawincustomers.com. Thank you for listening. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.